Now we're going to look at how to spot liquidity in the Forex market. Remember in the last video, we spoke about liquidity is going to come from those swing points in the market. And also we're looking at those liquidity gaps, which is actually those imbalance levels. So how can we spot liquidity easily in the markets? Well, the easiest way, and I'll show you quickly with a brief sketch here, is we're looking for patterns. Now those patterns can be where we see a double top can be created. And this double top here is the most common one you're going to see, which will create an area of liquidity. So let's just create a daily sweep there. So we can see here that the market is creating a double high. Now, very often you've probably been taught to sell off a double high or buy off a double low. That is not how I trade. That is not the way I look at the markets. What I'm looking at here is when we see this liquidity created, and this is how you can easily spot this. And it can be like a double test like this. And we can also see a double test to the downside like this. That's going to create, once again, that area of liquidity. Like I said, these are the most common. What we're looking for is for an area of supply or an area of demand, okay, to be sitting above or below those liquidity points. And very, very often, this is where you're going to find that the markets will manipulate you into selling from these highs, expecting a break of this low to continue, and then you see a pullback to run the liquidity here into the supply and then a continuation. Now the same we said, you can see the pullback to run liquidity of the lows here into demand, then the continuation. This basically is how to spot that liquidity. This is the true movement in the market. This is spotting that liquidity. So that is the most common one you're going to find. And you're going to find these are set up above or below areas of supply and demand. Now, the other way we can look at the liquidity as well, and let me just get my tool back, is we can look at the liquidity to be sweeps in the market as well as liquidity runs. Now, there'll be a future video which goes through all that. Instead of going through in today's video, it's just really how to spot them on a chart. So let's look at this price chart. We also have one other way we can look at liquidity. Let me just quickly do a sketch for that. We can have a trend liquidity, which is your common trend line. Okay, your trend line can become an area of liquidity, which may want to be run. Now, the trend line would be the low here. Okay, on an uptrend, your low would be that area of liquidity. Now, majority of times, you most probably already been taught, okay, let me just mark this out as a sweep area. We are taught, okay, as retail traders, that you're looking to take a buy off a trend line, okay, which can work. Looking for a retest of a trend line continuation. Now, that can work if the right conditions are there. But most of the time, what you're going to find here is, let me just put that back, is you're going to find down here, okay, is your area of previous demand. Let's say we had the market push into, but down below, we're going to have a large area of demand, potentially where price has not yet come into. And what you're going to find is that this area is going to act as liquidity for the market to push through, and then we see the true move away. I've seen this happen above an area of demand. We see a push out and the market basically just wants to run deeper into that demand. And this comes into understanding a fresh and tested zone as well. And again, this is all inside that supply and demand playlist. So there is how we look at liquidity. Let's see how we can spot it now on this price chart. Hey traders, we'll get back to the video in just a moment, but I wanted to give you a gift for hanging out with me today. I want to give you access to my Telegram community. This trading community will share my chart markups and give you access to my trading strategy. But it's more than just a community. You're going to have some actionable steps to accelerate your growth with hanging out with other like-minded traders, all looking to improve their trading. And it's free as my gift to you. So just hit the link above now to join the Telegram community. Now back to the video. And we can identify, let's look at this move here to the upside where we can see a break of structure. Okay, so this is a true break of structure to the upside. What do we have here on the way up? We have all this area of liquidity. Okay, so we have this run here to the upside, which is creating liquidity. The market is then breaking through this liquidity. We have an area here of demand. Okay, not quite into. You can see we push in with this candle, and then the market, we break structure here to the upside. We then break this small structure here on this area of demand as well. Okay, where we do push into that demand after we run all of this liquidity. Now what that means, this is a tested zone of demand down here. We run through that level, which is expected when we're looking at fresh and tested zones, and then we continue to push away. So all we're seeing here right now is this liquidity being run, okay? And that's how you spot that liquidity. You see all the lower wicks here being created above or out of this area of demand. And then we're looking for that run of liquidity again to run the swing high. So we continue along, and I just want to show you another example here. Let me just find one. Okay, so we have this area of demand. Fine tune that to the demand zone. And we have that double, well, we have this low here and here created, which is the liquidity created, okay, above the demand. So we have a break of structure to the upside. That's how we quickly and easily spot this. This is our break of structure. What's more important, we also see a sweep of the low here, which creates the area of demand. When you see these types of sweeps and then a runaway to break structure, they very often will create a great area of demand to look to trade from. Now, what we can identify here, we have the breakout, a pullback, a sweep of this high, but then we continue to move sideways, creating this liquidity here, even this swing low, and eventually we push through with a strong push down, which continues to do what? To run this high, which is a break of structure again. But that is the liquidity, okay, created here. Let's change that to a sweep area where we run these lows, okay, into this area of demand. And then the market pushes away. So you saw how we can quickly see the engineered liquidity. We have the line chart here of liquidity, which was pushed through into demand, and we have the double test low of liquidity, which is pushed through into demand. That's how we look at spotting that liquidity on the charts. You're looking for the good setups, okay? Now, again, if we look down here, I didn't mark it, but we have a sweep, okay, of the low when we rally away. This is a rally base, rally type of style of demand. You can see the sweep of liquidity, okay, before we push away. We create the liquidity inside, okay, double low there, and the trend line of liquidity as we push up, pull back through, we remove all that liquidity deeper into the demand for the push away. Now on this one, we actually moved sideways. We moved higher. This one we actually failed to move higher. We moved sideways, created liquidity, and dropped in and then pushed away. So you can see how easily it is for you to quickly spot that liquidity. You just need to understand those patterns we went through, okay, which was that double test. Okay, looking at this high as an area of liquidity. In the example down below, let's draw this out. We can identify the liquidity was created. There is our double test. Okay, here we push through liquidity into demand and we push to break structure. The other one we was looking at was obviously the trend line of liquidity, which can be created. Okay, and we can see the market want to push down and then push away in that area of liquidity. There's that liquidity we pushed through into demand below, pushed away. Again, let's see if we can draw this out so you can easily spot this. There's our breakout. Now we do create a double low there, but then we start to create this liquidity on this trend line. And you can see the market then pushes down through. To start with, we pull back and then we start to push through that liquidity and then eventually through the low into demand. That's where we see the push away. That is how you can easily spot liquidity on the chart, is we're looking for those types of patterns of the double low or the trend line pattern to occur above or below the area of supply or demand. If you keep that in mind going forward into the next video, where you can understand exactly how we look to identify that area of liquidity, so make sure you watch that next. And if you want to learn more on how you can actually get the free access to the Telegram channel, there'll be a link for that popping up next as well.